Good morning. This is Len Nevin with Loyalty Home Group at eXp Realty. It is Friday, October 30th, 2020, and we're going to talk a little bit about real estate. First things first, we've got Halloween tomorrow. It's the end of another month, and we've got officially really just November and December left in this year, and 2020 will finally be over. Our biggest hope is that 2020 doesn't infect 2021. Hopefully we can end the year with some hope and some glimmer of normalcy, with possible, return to normal life with the potential vaccine or whatever is coming out. You know, I don't know. At this point, I'm done trying to speculate what that type of life is going to look like. It's almost a distant memory. I was talking to my wife about that earlier. It's like the last time that we were just acting normal was back in March, and that feels like that was years ago. So anyways, long story short, let's talk about some real estate, something I do know a little bit about and have, some insight on. So let's jump into Arizona first. So, sorry, that was a little bit of quick scan on there. So let's talk, like I said, Arizona. So this is a program that I subscribe to. It's called the Cromford Market Report, and basically what these guys do is they run statistics like crazy mad people. So it allows us to, on a daily basis, be able to jump in and see where things are at. And so this is the big thing right here, is what they monitor is called the Cromford Market Index. And so everything above 100 is a seller's market. Everything under 100 is a buyer's market. And as you can see, we're way above 100. And what's interesting is I've seen it where it's at right about 200, and it's because inventory was low, but demand was still a little bit low. But right now what we're seeing is supply is high. Sorry, demand is really high, and some supply is really low. You want this to be at about 100 as well, but it's really, really low on the supply side and really high on the demand side, which is turning into this 355 piece. So a couple of things that I've been looking at recently inside of here is they've got all these little dashboards, and so I'm going to go to what's called the market conditions dashboard, and this allows us to look specifically at different neighborhoods, not necessarily neighborhoods, so let me rephrase that, cities. So it's going to look at a full city versus just small neighborhood. But so this starts off and it picks the entire Arizona regional MLS data for Greater Phoenix. So it's the entire Phoenix metro area. And as you can see, the accepted contracts, this is a year snapshot that started back in January, and then, gets us all the way up to today. So this is a year-to-date, pretty much accumulation when we're looking at it. And you can see that we were going up, shot down a little bit, went back up, COVID, shutdowns, the whole world's going, what's going on, and then it just skyrocketed. And it came right back to where it was, dropped a little bit as far as, contracts accepted, and it's kind of trickled back up. And right now we're again at, last, couple weeks, last updated the 24th, 2,608 contracts were written that week. So you're seeing it's a steady incline on that. This one's the crazy part is, the beginning of the year, there's 27 days on market, and right now we're at 8. I'll just let that sink in for a second. Average of 8. So properties that are going under contract, if your home's going to go under contract, it's going to go in at least 8 days. If you're at 10, 15, 20 days, something's going on. And we've seen the price per square foot just... So valley-wide, we're at $209 a square foot, and this is for at contract acceptance. So that's not going to say what is closing at, but there's another chart, and I wish I knew what it was right off the top of my head. There's so many charts in here, as you can see, but basically what I saw was that right now the average price to sale price was like list to sell price right now is at like 99%. So there's a good chance that, the closed average price per square foot is probably like 208. I mean, it's probably not too far off. So super healthy market. We can go through here. So if you're in a different part of town, reach out. Say, hey, what about, Cave Creek? Here's Cave Creek. What about Chandler? Here's Chandler. What about Gilbert? Here's Gilbert, skyrocketing. Same thing. What about Glendale? So I can pull these reports specific for your part of town. If you're like, well, I'm in Glendale, but look at all the zip codes. Or, I'm in Phoenix. Look at all the zip codes in Phoenix. Um, you know, that could be anywhere. Scottsdale could be anywhere. So I can narrow it down by zip code and say this is what's happening in that specific zip code, because real estate is local, and then really it's really hyper local, because one neighborhood will sell better than another neighborhood. So this program allows me to be able to dig up that data and find out what it is that I'm looking for. So that's what's going on in the Arizona market. We consistently are seeing, inventory is still low. We're still seeing, not enough new homes coming on the market, and the buyer pool just is continuing to stay the same. And this is that snapshot that I was telling you about that really kind of gives us that idea that I'm looking for. And they still need Adobe. So this is going to be Phoenix wide, and obviously I can pull this for the whole area, but what you can see is right now active listings is 13,000, but really excluding, this is 8,000 properties available for sale. 2 years ago we had 18,000. And the amount of sales per year, we're up 4,000, but we're down 10,000. So you can see where we're having that squeeze of demand. But that's a high. That's crazy. Month supply says 1.4. Here's that average listed sale price is at 98.56. So if you list your house, you should pretty much almost expect to get really, really close to what it is that you're asking for. That's basically what that means. You shouldn't have to, as a seller, negotiate too much. Even though the active listing price per square foot is 268, but the sales is 206. Doesn't mean there's a lot of negotiating going on. It just means that the homes at the higher end that are listed aren't selling as quick as the stuff that's on the lower end, which is that 206. That's really kind of what we're seeing here, valley-wide, and that's your quick snapshot as far as the health of the market. Once again, 1.4 month supply of inventory, and when we do that 1.4 month supply of inventory, that's if we're saying it takes 1.4 months to close or whatever, because that's this days on market, 42. That's list to close, not list to contract. So 42 days from the day you list is when you should expect to close. And it was only 60 days, so it's dropped, but not substantially. So that's a quick snapshot on Arizona. Inventories continue, like I said, continues to drop, and there's just not enough homes, and the amount of buyers continues to go up. So UCB that's under contract continues to go up. So that's part of the squeeze that we're seeing. Let's talk Illinois, because I've got my beautiful chart here now that gives me some ability to look at some Illinois stuff. And so residential closed listings, we looked at this a couple weeks ago. We were here, and it's, the blue closed listings dropped slightly, but it's still up compared to a year ago. Under contract went from, a couple weeks ago we were here, now we're here. And that's way up from last year. New listings, it's starting to steady off, so we're, there was more listings this year than last year, so I think a lot more sellers are feeling more comfortable. It'll be interesting to see, because Illinois is kind of doing a crackdown again because of the rise in COVID cases, restaurants shutting down, so we'll be keeping an eye on this. There may be, I would anticipate maybe this rising up, because you may have some sellers who say it's time for me to get this thing gone, I don't want to deal with another shutdown or whatever, time for me to get out of Illinois. I don't know. Rental listings are down. That's good if you own the property. That's bad if you're looking for a rental. That's a hard one to read. Open houses are starting to tick back down. It's a combination of weather plus the shutdown, so we'll see what happens with that. This is the showing activity, and we are seeing showing activity start to drop. But as you look at from the blue line, which is last year, that's just seasonal. So, that's the weekly average for, it's just kind of a seasonal drop. And you can see that these two lines are starting to match each other here. And they mirror each other pretty much. But, it's still up from a year ago. There's more people, as you can see, there's more people looking. More people looking, less inventory, higher prices. Supply demand. Sold prices are up from a year ago. And lastly, rented prices are actually down slightly. Last year you could probably get, for that week was $1,675. This week you're $1,600. Um, and it's really hard. Let me see if I can zoom in on this because this is a little bit harder to read. Sorry about that. But so this orange line looks like that was the 2019 rented price, and then the yellow line is 22 or 2020, and so it looked like at some points it was higher. And it's basically roughly the same, not a major change. Some other things that are driving a lot about what we're talking about is obviously mortgage rates. So mortgage rates continue to have fallen. We saw it actually tick up 0.01% this week compared to last week. So it basically, as it says here, mortgage rates remain relatively flat, so not much change, which means if you're a buyer who's on the fence, there was really nothing about the interest rates that made you jump off the fence. So what typically would make someone jump off the fence would be, if they see it starting to go up, they're going to, oh man, I better get on this now. And that would probably be, if they start going down, maybe they go, oh, I don't know if it'll ever go this low again. So it's any big movement, that's where you see these spikes here cause movement. You see it go up and flatten out, and then it goes back down again. Anytime you see these spikes, that you see a spike because it's stagnation, or you start to see a decline, and then the lenders want to do something to, get that kind of like a boost of energy in there again. So, full disclosure, once again, these rates here that you see they don't necessarily mean that's the rate you're going to get. You need to talk to your lender. Where's your credit at? Where's your debt to income ratio at? All sorts of different factors. Length of credit, amount of, all that stuff, score, history. It's all big algorithm that helps you determine whether or not you get these rates. But, if you're getting if you're quoted a 5% rate and you're like, well, I thought I should get 2.81, it's like, well, look at your credit history and what type of debt to income ratio you're asking for. The less risk you are, the better chance you are of getting that rate. So that's pretty much what I have for us today. Once again, as I always say, reach out if you have any questions. It's what we're here for. We can do some specific research for you, specific on your property, specific on the area that you're looking for, any type of investment type opportunities that you're looking for. That's what we're here for. So thanks again for watching, and we'll talk to you next time.